Well, folks, few things for me to speak about in today's video. 3 things for me to react to. First one up here, we're going to talk about PayPal. There are reports coming out that PayPal has started a round of layoffs, so we're going to speak about what's likely going on there, and I want to kind of share my opinions and perspectives on that whole situation. Then we're going to go ahead and react to this one. 4 big short traders on why they're not so short these days. These are the gentlemen. This is the first time in history, I believe, all 4 of them from that movie all sat down together for one interview. So this should be a very interesting one to react to here. Looking forward to getting to that one. And then the last one up here is Josh Brown. First rate cut potentially being in May instead of March is no big deal. So I want to hear what he has to say in regards to that one, okay? Appreciate y'all joining me as always. Thanks so much. Make sure you smash the like button for me. That's all I ask. And make sure you're subscribed. If you like the content here, always be subscribed. Also, the massive live streams going on tomorrow on Twitch. That's going to be pinned comment down there. We have Meta reporting, Amazon, and Apple all reporting after the bell tomorrow. That's going to be probably the biggest live stream in the history of my Twitch channel. I think we'll have over 1,000 live viewers, so that one should break records tomorrow. So be ready to rock and roll for that one, okay? All right, guys, so PayPal first off. PayPal starts round of layoffs in cost-cutting drive, says this report. PayPal started company-wide job cuts on Tuesday as its new CEO aims to slash costs and improve profits, according to a media report. So this wasn't necessarily a big PayPal report came out. This is just a report from the media. The layoffs will reduce, they could be waiting to maybe announce it to earnings, which are coming up very soon here. The layoffs will reduce staff across a range of teams, including research and development and engineering, the information reported. The article didn't provide an estimate of the percentage or total number of jobs affected. The cost-cutting move comes less than a week after CEO Alex Chriss unveiled new AI-driven features that are focused on jump-starting user and merchant engagement to fuel growth. Chriss, who took over for Dan Schulman in September, started in November that PayPal cost base was too high and it was slowing down the company. As such, I'm in the process of evaluating our most profitable growth priorities and aligning our resources to those priorities, he said. We will become leaner, more efficient, and more effective, driving greater velocity, innovation, and impact for customers. Now, I've also seen, people posting on LinkedIn, people send me a lot of stuff. I don't go on LinkedIn much, but I have a lot of people that send me stuff in regards to LinkedIn and people confirming basically they just got let go from PayPal and things like that, okay? So what's my thoughts on this, okay? So unfortunately, it's a step that had to happen here. If you look at PayPal over the past several years, right, everybody looks at this company, they say this is too bloated, there's not enough direction here. There's not enough of a clear path on where the company's going. And it showed maybe in their financial results over the past few years in terms of growth rates slowing down massively. And for a while there, their bottom line was going in the wrong direction. It showed in product innovation. The company's just not in a good place, right? And so Alex Chriss came in here a few months ago, and he's trying to lean out the organization and put them into a Meta-like situation, right? And a Meta-like situation is leaning out the teams just as Meta did and aligning the company, here's where we're going, and let's move fast and let's go there, instead of being so bureaucratic and slowed down. And so PayPal grew so much over the years, but it became too bureaucratic. Everything started to move too slow. Innovation started to slow down with the company. And, obviously it's weighed on the company, it's weighed on the stock, right? That's why the stock went from $300 to $60. So this is also an absolutely necessary step from the Wall Street side as well. Wall Street, I'll just be honest with you guys, they're not going to buy the stock until the layoffs are announced. It's bottom line. They're forcing PayPal to do this. They're forcing them. And how do you force, as Wall Street, how do you force a company to do layoffs? Don't buy the stock. Have them flounder down at these horrible pricing. Don't value the company at anything, which is basically where PayPal's valued, nothing. It's a joke. Considering the growth rates PayPal has and considering where the forward P is on the stock, it's a joke. So they're doing the same exact thing they did to Meta and Zuckerberg. They said, you're doing the cuts. Or you'll be out of a job. Because if there's enough pressure on the stock for long enough, right, the board of directors gets voted out. If the board of directors gets voted out, then they replace executives at the company. And so that's exactly what happened. Dan Schulman, at the end of the day, got kicked to the door along with other executives. Alex Chriss brought in. We need a guy that's going to streamline the company, lean out this company, get innovation back going in the right direction, and that's what's going on here. So, it's never something you really like to see, but it's a necessary step. This is business, is what has to happen. is what has to happen. So, certain moments, it's like you're adding employees, and that's the wave. And then the other time periods, it's like we got to lean out because we added way too many employees, and we're going to potentially die on our own sword here from, let's just call it a lot. There's going to be a lot of people that hold back your organization. You think every employee PayPal hired over the past 5, 6, 7 years is a good employee? Do you think that? No, of course not. That doesn't mean every single person that's going to get let go is a bad employee. But I can tell you, there's always a bottom 10%. And those are 10% you got to clear out. And most of the big tech companies, by the way, they do these silent type layoffs all the time. They get rid of the worst performers of the company, and that's how they stay on top. You can't have, let's just call it some people holding you back. You can't have that in an organization. It lets the whole team down, right? Does an NFL team just have okay players around? No. You're going to win the Super Bowl, you need the best players. That's the bottom line with that. All right, the next one up here. 4 big short traders on why they're not so short these days. Oh, by the way, one last thing here, okay? Will the stock price start to bounce back here in the short term? I would say there's a high probability. I think they're going to come out. They'll probably make the big announcement and make it official on earnings day. I think earnings will be decent. And I think, from there, Wall Street will start buying up the stock. And it will happen rapidly because then everybody understands, okay, the layoffs are coming. It's going to save them a ton of money. EPS is going to blast higher over the next few years. And along with the innovation Alex Chris has coming in, that's going to kind of like supercharge things. It'll be a meta type situation. So, that's just my opinion on that. We'll see what happens, but I don't think there's a ton of time to add shares, at $60. That's all I'll say about that. 4 big short traders on why they're not so short these days.
Weissman, Vincent Daniel, and Porter Collins. And by the way, this is a TV first to have all these guys here at the same time, at the same table.
That's
so
true.
Thank you guys for being here.
Great to be here.
Thanks for having me.
Thank you.
We showed a clip from the movie, so I got to ask you, and I asked you this in the panel, how much of it was true? What do you think?
What do you think?
The book was 100% accurate. I would say
Yeah.
the movie was 75, 85% accurate, but the way that Adam McKay was able to explain CDOs to people the way he did with the fourth wall was amazing. There was no alligator technically coming out of the pool, but all the other stuff I would say was pretty good. So.
And the strip club scene never happened.
Of course not. Of course not.
But it was 20 years ago almost that we came down here to Florida, and there was all this building, and there was no people. And so that's when that scene where Steve came back, and it's a problem.
When you went there and you saw the foreclosed properties,
Yep.
they were empty, and the bills were piling up, et cetera, you knew you're on to something.
It was pretty obvious,
Yes.
yeah.
Are there any trades today that you have as much conviction in as you
Good
did
question.
back then?
Good question.
Steve.
I mean, the one I have that is along is infrastructure. Government's going to be spending about $1.2 trillion over the next 10 years. So there are a lot of things to do. I mean, I wouldn't call that as big a conviction story as the Big Short. I mean, the Big Short was taking on basically Western civilization and everybody telling us we were lunatics. This is a more relaxed investment story, but I think it's a great one.
Things have changed a lot in the financial system. Have they changed to the point where there won't be a trade like that?
Well, right now, the Fed's on the case. Whereas
Right.
when we think about what happened during the Great Recession, there was a famous line by Michael Burry, is, "I knew more than Alan Greenspan." He wasn't lying. He did. The Fed has widened up, and now the ability to have the price discovery, adverse price discovery like we did back then, would be very, very difficult.
Right.
It won't be allowed. I mean, Silicon Valley lasted 24 hours.
Exactly.
That was it.
It was a
But the only
blip.
other time where the Fed was offsides was in 21, 22, where they were way behind the curve on inflation. And that was a time where short sellers could really profit because they knew the Fed was offsides. And so, that's not the case today. The Fed has 400 or 500 basis points of cuts in their back pocket if something bad happens. So that's what, as a short seller, you're fearful of that. So if something bad if that happens, they just cut rates pretty quickly.
We
So-
know.
Okay, so let me push back against him for a moment. And hey, who would have ever thought this day would come? I'm pushing back against the guys from the Big Short and sounding more bearish than them. Holy smokes, okay? Let me push back for a moment here. So 400 or 500 basis points plus of rate cuts the Fed has at their disposal, right? Here's a problem, and here's the thing. That sounds good in theory. But guess what? In the Great Financial Crisis, for instance, they cut rates 400 to 500 basis points, right down to zero. And we still had the markets crash 50%, right? And we still had the housing collapse, and we still had unemployment go to nearly 10%, and all those sorts of things, right? And it took years to come out of that. So just because you cut rates does not guarantee you from, we didn't have any problems and we got past everything and things like that. And so I just think that's a little food for thought in regards to that situation. And we might not have a great financial crisis anytime soon. It might be decades from now until we have one of those situations, or maybe it is the next few years. We'll see. But all I'm here to say is just because you cut rates does not guarantee you're not going to have some big problems in the economy and some big problems in the stock market, okay? A little food for thought in regards to that.
It's a much more difficult business to be a short seller these days. So I'm wondering, Danny, in terms of finding that trade, how have you changed your approach?
Well, the four of us traded pre-financial crisis,
right,
during financial crisis, and we've all traded post, not necessarily together, Porter Vinny more than the four of us. But I think there's still bits and pieces of it alive. What do I mean? Back then, there was glimpses of, tech companies there were companies posing as tech companies that were just consumer finance companies. You see those pieces today. You see Upstart and Affirm and those. And we've seen that game before. We know how that ends. These are specialty finance companies. And when credit comes back to haunt them, they're balance sheeting now the same way the mortgage companies did. They couldn't get it off their balance sheet. Ooh. Those are the things that I look for. And yes,
so he's calling out Upstart and Affirm specific here. That's important.
Smaller companies that maybe not the rest of the investment community can get on, but these are things. So I see glimpses of it always.
Yeah. So I have a different approach. I was born Jewish and I've converted to long only. I literally just made that up right here. That was my epiphany about that question.
Needle point that into a pillow or something.
Yeah.
But it's true. Your life has changed, and people were remarking about this, how zen you are, how happy you are.
I know, it's kind of shocking.
You're not the guy in the movie, that's for sure.
No. That guy was very, very, very angry, and I think the movie accurately
portrayed your anger.
He totally captured
I kind of miss that guy a little bit. I'm not used to this.
I don't miss him.
But Steve can go zero to bear, as we all can, pretty quickly. And that's the thing. If times change, we change.
Right.
Right. Let's get to some of the highest conviction trades you do have right now, and I'll toss a question to you guys.
Well, as a short seller, you're loath to mention shorts, but one of our best shorts this year and has been Tesla. Even over the past 3 years, Tesla's been a big underperforming stock, and so I think they really have problem with sales. And one of our best traits is calling BS on a company, and I think eventually the market will come around to the fact that it's really an auto company with not great tech. Everyone else is catching up to them, and so I think it has been an underperformer. Will continue to be underperformer.
Okay, so they cut that off. Okay, so here's the deal in regards to Tesla and being short Tesla or even having puts against Tesla. I would not carry shorts or puts past this year. That's my opinion. I think I only have one put option contract left in regards to against Tesla as a hedge for my long position, right? And I'm looking to get out of that pretty soon. And the reason being is, there's just too much coming down the pipe in regards to Tesla. And, the overvaluation, it's already gone through its big tough moment of the last couple of years, right? Of, credit in terms of interest rates being so high and then having to bring down price, and their margins coming down and all those sorts of things. I think everything's in that bottoming phase for the company in terms of growth rates. We're all, right now, we're going through it right now. Last few quarters and the next quarter or two, the troughing of margins, the troughing of growth rates. And I think starting in the back half of this year, everything starts to come together for Tesla. Margins start going back up. Revenue growth rates start going back up. EPS growth rates start going back up. The whole story starts to come back. And so I just wouldn't feel comfortable. Outside of, once again, some sort of massive recession. But you can say that for every stock. So you can't just, hold on to what if we had a massive recession? Because you could say that for every stock in the market, right? They'd all be hit. So you have to kind of predict the economy is just at least okay. And assuming the economy is okay, Tesla, everything bottoms out here in the next 1 to 2 quarters and starts getting better in the back half of the year and then just keeps getting better and keeps getting better for potentially a multi-year run. So that's kind of my 2 cents. I would not stay puts or shorts past really even the next quarter or two in regards to that one, right? First rate cut potentially being in May instead of March is no big deal, says Josh Brown. That should be interesting.
It's Wealth Management's Josh Brown. We'll get a quick comment from you before we
nice outfit,
after a break. All right, what do we do?
Like that.
Well, look, I think Jeff came on in November and he was enthusiastic. And the only thing that's really changed from then until now is we had one of the best 3-month periods in the history of the stock market. We did plus 19%. And quite frankly, we've done that less than 20 times over the last 100 years. The problem for the recession case is that on 16 of those 17 occasions, not only did you not have stocks lower, but you had no recession. And in fact, the market was up an average of over 30% 1 year later.
That's interesting.
So I would have to hear the case for why this time would be different. If you think we had this $5 trillion rally in the stock market over the course of 90 days over absolutely nothing, that's a really interesting story, because that says to me everyone's wrong and the last people still calling for a recession are right. They might be, but there's very little evidence. Everyone is working. People's bills are being paid. The market seems fine. The economy seems fine. It certainly could change. And I think if we were going to interest rates of 6% to fight inflation, everyone would be singing a different tune. That's not what we're talking about. We're talking about the first cut moving from March to May. To me, it's a very big, no big deal.
Yeah, obviously a bit of a knee-jerk reaction in the market. You stay with me. I lied. We're not going to take a break. We're going to get right to the market zone. And joining us as well, SoFi's Liz Young and CNBC senior market commentator Mike Santoli.
Before we get to SoFi's Liz Young and this other gentleman's opinion here, okay, let me say this. What did I tell you guys at the end of last year? What did I tell you was going to happen in Q1 of this year? I told you there was going to be a down period for the market where things got shaky, and they're going to blame it on something. And what I tell you, the thing they're likely going to blame it on, they're likely going to blame it on rate cuts aren't coming as soon as the market thinks. And so here we are in this moment. It has nothing to do with earnings or anything like that. It's going to be, oh man, rate cuts. They're not coming as soon as we thought they were, right? And so that's the reason to send the market down. And like I said, it was probably going to happen February, March, something like that. They're going to send this market down, and it's already started to play out, right? Sure enough. So, that's the story. That's what's going on here. Exactly kind of what I thought is going on is going to happen.
To you, I'll ask you the same question that I asked Jeffrey. Does March really matter as long as we know cuts are coming?
Well, it matters today to the market because everybody seemed pretty sure that that's what was coming.
To the angry algos, maybe. But.
Right. Well, I think the other thing about it is that the idea of a cut in March, it was pretty quick, and it gave people this sense that we were sort of invincible because now cuts were on the table. They were going to start. They were going to backstop it. The put is alive again, and we wouldn't be able to go down because they're going to start cutting. So now we're sort of coming to reality of, all right, I think what he told us today was, you haven't been listening. I think Leisman was the one that pointed that out. You haven't been listening to what I've been saying. You haven't been reading the statements. I think he's been pretty clear from the jump, from the beginning of this hiking cycle, that they would rather stay too high for a little bit too long than cut too early. He has not changed his tune on that. The market continued to try to bully him into a different position. And today he said, I will not be bullied. We call the shots.
We're still going to have this debate, Michael, and I think, Jeffrey alluded to this as well, as to whether whenever that cut does come, that first one, which the chair himself called a highly consequential decision, is it going to come for the right or the wrong reasons?
Right.
Jeffrey's still looking for a recession in calendar year 24. Inflation continues to come down. What forces their hand, so to speak?
Well, nothing forces their hand. And I think the bull case is that they can be bringing rates down just based on their stated framework. Right? Their outlook from the last time they delivered it was they thought inflation was not going to be as low as it is right now, and they thought growth was going to be weaker. So that leaves them room. There's a lot of room in here. What I heard from him sounded like a guy who just kind of didn't have the votes in the room. He felt like maybe we got to wait a little longer. Let's prolong this. I think that's fine. I was saying last week, March to me is not make or break for the stock market, but there are enough people who think March is make or break. You have to clear them out of the market. Let them sell. Clean up the market. We're back to where we were at the beginning of last week in the S&P 500. We're well higher than we were when March was projected as an 80% possibility of a Fed rate cut. We're down below 40. So to me, yep, it's one less thing, I think, that gives you a little bit of a cushion psychologically. And yeah, the longer you wait, the more likely perhaps that you end up making a mistake. And you end up
true.
twiddling your thumbs while the economy does buckle a bit. So we're going to know more. I don't think he was going to front run 6 or 7 weeks of growth and inflation numbers and say one way or the other whether it was happening. It was a surprise. He seemed to close the door on it a little more because probably that was the tone of the committee, of the meeting.
100%. 100%. Very well put, guys. All right, make sure you join me on Twitch. Pin comment down there. Make sure you follow me on there. Get ready for the big live stream tomorrow. Much love and have a great day.